So what's up guys, welcome back to the channel. So this video is basically going to be about risk management, where I will show you some setups that I've taken in the past, some of my previous setups and some setup I took this week that I actually recorded, and show you how to manage your risks in every trade you're taking, so that whenever you're entering your next trade or your next position, you will know how to manage your risks effectively. If you ended up gaining knowledge from today's video and you ended up knowing how to fully manage your risks in Forex trading, don't forget to hit the like on this video, subscribe to the channel, turn on post notifications so that you can notify whenever I upload future videos. And yeah, with that being said, let's get straight into today's video. So real quick, before the video starts, in collaboration with TradeWill broker, I'll be doing a giveaway of $40, and this is how to go about winning it. So first off, for the next 14 days, the first 10 people that will use my link in the description to register for TradeWill broker and actually send me a screenshot on Telegram or on Instagram will be qualified for $1 giveaway. So I'm giving away $1 to 10 people for the next 14 days. Secondly, for 2 people that actually use my link in the description to register, deposit and actually place trades, and send me a screenshot on either Telegram or on Instagram, I'll be giving away $5 to 2 people, which makes it a total of $20 now. Lastly, for 2 people that actually use my link to register, deposit and trade up to 0.1 lot, and actually sends me a screenshot or Telegram or on Instagram, I'll be giving those people $10 each. So good luck on that, and let's get straight to the video. Now, when it comes to risk management, your stop loss size actually determines your lot size. Why I say this is very important is because you can actually use as high as 1 lot on a small account, but what you should put in mind is your stop loss size. It's only your stop loss size that will determine how much you're willing to lose or how much you're willing to risk in a particular trade. Now let's take this trade I took last week for example. What I want you guys to see is the stop loss size. So this place that says stop, you can see the size says 25 here. So that's the stop loss size of this particular trade I took. It was 25 pips stop loss. So what I want you guys to do now is to go head over to my FX book. If you head over to my FX book, I'm going to go home first. Either you have, if you're on your mobile device, you can download my FX book on both App Store or Play Store. It's the same thing. So you have to go to FX calculator if you're on PC, but if you're on mobile, you see Forex calculator. So you go to position size calculator right here. So now, since we were trading NZD-USD, which is the pair that is right here, NZD-USD, I'm going to go back to my FX book right now and choose my pair. My pair is going to be NZD-USD right now. NZD-USD. So this is NZD-USD. So it says the account in currency, you put the USD as a USD account. Then for a small account, let's say you're trading for a small account of about $20 or $10. I can even put $10, but let's use $20 for this example. Then risk to reward ratio. What you're going to do here is it's asking you how much you want to risk on a particular trade, because before you actually enter a trade, you have to put in mind the amount you are willing to risk in that trade in case the trade doesn't go your way. So let's say I'm trading a $20 account. I cannot really use risk to reward ratio because the account is very small, so I'll actually have to press swap it money. So in the swap it money section, since this account is a $20 account, I can risk anywhere from $2 to, I can even risk as high as $4 because it's a small account. So risking $4 will give me the chance to place about 5 trades. Risking $2 will give me the chance to place about 10 trades. So depending on what you're comfortable risking, I personally myself am comfortable risking $4 in this particular trade, so I can actually go for $4 in this particular trade. Then it asks you for stop loss in pips. Now this stop loss in pips is actually where you have to go back to your charts. So you can see this, that's why I gave you guys this number. The stop loss in pips is actually 25 here. So when we come back to here, we're going to press 25 as our stop loss. Then the trade size in lots, since we're using standard lots and not a micro account or a cent account, we're going to leave that at 1, and we'll press calculate. So it said we can use 0.02 lots, and you can see the unit. The unit says 1,600. This 1,600 here simply means that the trade size, the trade unit is actually 0.16 lots, 0.016, but it has helped us to round up to 0.02. And the reason why I say this is that let's imagine that we actually use a $5 now, a $5 risk. Let's change our account size balance to about $50, so we can actually raise $5. So $5 risk in a $50 account can actually allow you to place 10 trades. So if you change our amount to $5 here and our account size $50, I actually press calculate, you see that it still remains at 0.02. And why is that? Because you see the unit now has changed from 1,600 to 2,000 units, which means that we're going to be able to use 0.02, because units converted to lots is divided by about 10,000 or something. Yes, so that's going to give you 0.02 or 0.0, whatever amount you get as the unit. But you guys should not really pay attention to units that much. Always pay attention to lot size, because 0.02 lot size is going to be the lot size I'm going to use for our account. So let's imagine we go back to this trade now, to this particular setup, and see what actually happens if we had actually used the 0.02 lot size. So I'm going to go, since I'm on my chart right now on my phone, which you're going to see on the screen right now. So I imagine I wanted to place this trade now, then I actually enter this trade at the entry was on my MT5 right now. So I'm going to use I'm going to press trade on my MT5. So it was a buy limit trade. So my entry was, the lot size 0.02. The entry there, it says it was 0.56217. Then the stop loss size says 0.55967. So I press place trade. So I want to show you guys, I'll click on it now. You can see it literally say, you can see the amount on the side on our MT5 right now. You can see the amount. It says $5, that was we're risking. And if you go back to our trading this thing, my FX book now, you can see that we actually wanted to risk $5 on this trade. And on our MT5 now, you can see the amount that is there is actually $5 right there, $5. So with that now, we're able to calculate the risk that we were taking on this particular trade and know how much we are willing to risk on that particular trade, which was $5. And you can see it was exactly $5 in our MT5. But let's say the reason why I actually told you guys that stop loss size matters when it comes to lot size. Let's say this lot size now, I'm in trading view. Let's say I did not use 25 pip stop loss. Let's say I actually used a 13 pip stop loss now. So I'm changing my stop loss from a 25 pip stop loss to like a 13 pip stop loss. Now we'll go back to my FX book and see what actually happens. So since we're still going to risk $5 on this trade, we're risking $5 of the same amount, the same account balance, $50, we're risking $5. But the only thing we're going to change here now is going to be 13. So since we're changing the stop loss to 13, what do you guys think will happen? Remember guys, at 25 pip stop loss, we had to use 0.02 lots. So if we have a smaller stop loss, what do you think is going to happen? Obviously, what's going to happen is we're going to have a higher lot size to use. So let's imagine we used a 13 pip stop loss in that particular trade, and as you can see here, it didn't really hit the stop loss for 13 pips. So if we actually use the 13 pip stop loss and we press calculate now, it says we can use 0.04 lots. You see, it increased from 0.02 to 0.04. And now if you actually go to our MT5 again and do the same thing, take the same trades again, let's go back. We're going to go for buy limit. We're going to go for 0.04. Although you see the unit is actually 3,846, which is 0.038. But it has helped us to run it up to 0.04. Whenever we're going to enter this value on our MT5 right now, it might not give us exactly $5. It might be higher than $5 a bit because it has rounded up a lot of points here. Because since this is 3,800 points, it has rounded up 0.038 to 0.04. So let's imagine we use 0.04. We're going to go back to our normal trade entry. We'll press the limits. We'll give the same values, 0.56217, and the stop loss is going to be 0.56067. So if you click on it now, you can see it's actually $6. It's almost close to our $5 risk, but it's almost the same because it helped us round up the values. On our MT5, you can actually write 0.038. It actually stops here at 0.03. But since we are rounding up to 0.04, that's why we're risking just $6. But it's almost close because we know that for the amount that was here, 3,846 points. That's why. And since you cannot enter 0.038 lots, we're going to just round up to 0.04, or you can stick to using 0.03 for a lower risk. So let's imagine we used a 10 pip stop loss. So you see the stop says 10 pip now, and we go back to our my FX book. So we're going to do the same thing. The amount we're risking is still $5. So the stop loss in pips is going to reduce down to 10. So the same thing that happened when our stop loss reduced from 25 to 13. If our stop loss reduces from 13 to 10, you know that the lot size will increase. So the smaller your stop loss, the bigger your lot size. So I'm going to calculate this right now. You can see it says we should use 0.05 lots, and the unit itself is 5,000 units. The exact amount 0.05. So we're going to do the same thing again for the third time. We'll use 0.05 lots, then the same entry rules, the same entry numbers. So we're going to use 0.56217 as our entry, and our stop loss is 0.56117. So for 56117, and we press place. As you can see, the same amount was still risked. The shift from 25 pip stop loss to 13 pip stop loss, just that small shift actually gave us more lot size to use. So that's why I said your stop loss size will determine the lot size you use, and your lot size is what will tell you, okay, the type of risk you're taking on that particular trade. So if you want to actually place any trade in the forex market, ensure that you actually know where your stop loss is going to be. And once you know where your stop loss is going to be, go to my FX book, check out the pair you want to trade. It has almost all the pairs that you are trading in the market here. So check out the pair you want to trade, then enter the position. Even if you're not using buy limit, let's say you're about to press this buy button exactly where the market is now, you're about to just press the buy button the way it is. Let's imagine that in this current market right now, in the current market that is here, I want to enter the market right here, and I just want my stop loss to be below here. So it literally says my stop loss is about, so I'm going to change this now. So my stop loss here is going to be about, if you start doing this a lot, you're going to get used to it, trust me guys. So I've said I want to enter the market in this very zone now. So my stop loss is going to be about, it's just 9 pip. It says yes, 9 pip. So before I press this buy, instant buy order, I can go here and I say, okay, I'm risking $5. My stop loss is just 9 pips, so I'll just press 9 pips. It's a very fast thing to do, and press calculate. So it tells me to use 0.06 lots. If I just press 0.06 lots now as this buy right here, I'm going to change this to 0.06 and just press on buy and put my stop loss just below this low in my own chart. So in my own chart, this low is somewhere here. So this low is somewhere here in my own chart. So once I click on buy and put my stop below that low, trust me guys, I already know that even if the trade goes against me and hit my stop loss, I will lose just $5 because I used calculated risks before actually entering the trade instantly on my chart. Now when it comes to risk to reward ratio, which is also another thing that deals with risk management. So risk to reward ratio is simply knowing how much percentage you're willing to make based on your risks. So if you're, let's say in this particular trade now, we have a risk to reward ratio of 2. So if we're risking $5 on this trade, we're going to eventually make $10 if this trade hits the TP. So the risk to reward ratio is just the ratio multiplied by your risks. If it's a 2 and you're risking $5, it's going to be $10. If it's a 3 now, if I increase this now, risk to reward ratio to a 3. So if I increase this now to a 3, it simply means that you're going to make $15 if you're risking $5. So 5 times 3 is 15. So if I increase it to 4, 5, 6, whatever amount the risk to reward ratio is, it's just the amount multiplied by your risk. So let's say it's at a 7R and you're risking $5 on a particular trade. So when the trade actually hits your CP, you actually end up making $35. 5 times 7 is 35. So that's what risk to reward ratio is all about. So this was our trade taken on Euro USD last week. It was a trade taken. You can see the stop loss is literally 26 pip stop loss for a 3-hour risk to reward ratio. Let's go to our calculator. So the pair we have changed from, and ensure you always change this currency pair value to the currency pair you're trading. So we have gone from NZD USD to Euro USD. So that's what we're trading now. We're trading Euro USD. So the account is in USD. So let's imagine that we're risking this time. Want to risk about $6, or just you can still leave it at $5. Still the same thing because we're using money amount we're risking. So amount in stop loss in pips. Since we're risking 20, the stop loss in pips right here was, you can see it down here, 26.0. So we use 26 pips stop loss. That was our stop loss in pips. You always leave trade size in lots as well because it's a standard account. Then you press calculate. You see it says we should use 0.02. You can see the unit is 1923. That means that it is 0.019. But since we cannot write 0.019 in lot size, you can just round it up to 0.02. So I'm going to go to my chart right now on Euro USD so you guys can see that it actually works. So we'll go to our limits, exactly where we set our limits before. So I will press for my limits right now. I'll press trade. Then they said we should use the lot size is 0.02. So we're using 0.02. Then the stop loss is, this is it here, is so we're using buy limit, sorry. So our entry price was 0.02641. Then our stop loss price was 0.02381. Then we press place. So you guys can see this was the trade here, and you see exactly on our screen, you can see the amount that we're risking on this trade is $5.2, which is the exact amount that we actually hope to risk because it's $5, and it approximated our 1,900 units to 0.02 instead of 0.019. It give us 0.02 because you cannot enter 0.019. And you see the same thing, $5, $5.20, very very close to our original risk. Let's say we reduce stop loss from a 26 pip stop loss all the way to like let's say we did a 15 pip stop loss on this. So now our stop loss is in 15 pips. Then we'll go back to my FX calculator. Just change. You only change the stop loss to 15. And once you've changed the stop loss to 15, you can see it says 0.03 lots. So if you go back to our charts now, you see the more we reduce our stop loss, the bigger our lot size is. So even if you're trading on like a 1 minute time frame or a 5 minute time frame where you have very very short and very very small stop losses size, you can actually risk as high as even 0.1 lot or 0, because it depends on your stop loss size. If your stop loss size is very small, let's say you are trading on lower time frame, 1 minute, 5 minutes, although personally I will not advise you to trade on those lower time frame, but let's say you still trade on those lower time frames. So depending on your lot size, if you don't just want to enter a trade and don't know how much you're risking on that trade, just make sure you use this MyFX position size calculator to know how much you're willing to risk on that particular trade. Even if it's a flip account, let's say you want to flip this $50 to let's say I want to flip this $50 now. I can just say, okay, since I want to flip this $50, I'm only allowed to take about 5 trades on this account. So since I'm allowed to take only 5 trades on this account, before, if the account goes where it goes, if it doesn't go where I blow the account, it's a flip account. You guys should know that there's a difference between a flip account and an account you want to grow. Flipping account, you actually need to place more risks because you want to grow that, as in you want to just flip the account like that. But if you're growing an account, you have to be very considerate. Like, if, as I'm saying, you have to risk like $5. If it's for a growth account, an account you want to grow, a small account you want to grow, risk $5 per trade for a $50 account. If it's a $50 account that you want to flip, I would say you should risk $10 per trade because you actually have the opportunity to place 5 trades. And make sure that if your total risk you're placing on a particular trade in that account, whenever you're taking a flip account, is going to be $10 and not more than it. So let's say I used I'm actually using a flip account, so I'm risking $10 in this trade, and since I've reduced my stop loss to 15 pips now, so I press calculate, you can see it says 0.66667, but yeah, it says 6,667, that's 0.066, but it helps us to round up to 0.07. Let's see how much 0.007 will give to us. So I'm going to delete this old limit right now. We'll go back to our Euro USD. So we'll enter a trade again. It's a buy limit trade. So a buy limit trade with a lot size of 0.07. Then our entry is 0.102641, and our stop loss is 0.102491, and we press place. You see, it literally says $10.5 that we are risking, just exactly the amount we were hoping to risk on this trade. So we see that it allowed us to go a lot higher in lot size, more than almost double the lot size we were using before, because of how small the stop loss size and because of the amount we were willing to risk on this particular trade. So it says $10.5 here for the 15 pip stop loss, which is almost close to our $10. It helped us to round up a lot of numbers here, so that's why we have 10.5 instead of 10. So same thing goes here for the risk to reward ratio. In this case, we had a 5 RR trade, so a $10 risk on this trade give us $50 risk after it actually hits TP. That's how risk to reward ratio was. This 5.24. If you had risked $10 on this, you would have gotten $50. If you have risked $1 on this trade, you would have gotten $5. And I will actually show you this now, because you see it's about 5.24. So let's impute our TP value here now. And the TP value, I'm going to use the TP value that is there. The TP value is actually 0.03427. Then press modify. So you can see the amount you ended up making. You see it's exactly what the risk to reward ratio does. $55, that's almost $50, in the range of $50, because of our risk to reward ratio is 5. So just know that this risk to reward ratio, remember, it gives us the amount we risk times the risk to reward ratio. So whatever we're risking on this trade, just multiply it by the risk to reward ratio to know how much you're going to make if the trade goes your way. So with that being said, that will be the end of today's video, guys. Remember, the $40 giveaway is still on, so ensure you sign up to TradeWill broker and follow the steps if you want to be part of the giveaway. The link will be in the description. I hope you guys have a lovely, safe, and an amazing day. Goodbye, everybody.